Hello everyone, welcome to the Ichimoku daily analysis for gold for Monday, October the 26th. We have a breakout to the downside below this symmetrical triangle that we highlighted from the last few days, and we can see here that on the previous day we had some sort of an attempt at a breakout above there, but we failed to have a solid close down below. With most of these patterns, when we have a breakout, the breakout is generally confirmed by either a bullish or a bearish close above or below the pattern, and that's exactly what we have here. The close here is fairly bearish. The close is down towards the low of the current candle, certainly between the mid-range level and the close, so it is bearish, but it's also a fairly large red-bodied candle, so we could actually even change the boundary here slightly of the upper boundary when the market attempted to break out but failed to close up above that previous boundary that we drew of the symmetrical triangle. Now, symmetrical triangles tend to be continuation patterns, so we need to be a little bit careful of this pattern continuing. They tend to be a relaxation in either an uptrend or a downtrend, but certainly the breakout to the downside is a warning that all is not healthy with this uptrend that the market was in. Now, we can see previously that the market attempted to trade up above this 1066 level here, and it's failed to close up there after testing it on many occasions. There's at least 1, 2, 3, 4, 5, 6, 7 occasions the market tested that level, so it's a very strong level there for the market. The target for this market is the distance of the height, the width of the triangle. So if we measure the top of the triangle at roughly 1072 and 1044, that's roughly 30 points. We'll do it roughly, and it's projected from the point of the breakout. So roughly 1022, so that's around this area, and that actually will coincide with this previous swing high, 1025. So we would expect the market that will retrace down to around that level. We also have the Kijun-sen at 1028, so there's potential for the market to retrace back to there, and we know that when the Kijun-sen turns flat, tends to be an attractor of price action, so there's every chance that the market will continue in a first time frame downtrend for at least another day and potentially find support around this level. What we need to do if the market does find support around this level is read the short-term dynamics for any change in the bearishness of the market, for a potential change of trend in the first time frame from down to up. But we don't want to preempt that. That hasn't happened yet. Just looking at the Ichimoku indicators, we are trading up above the cloud and a long way above the cloud. So the market is being stretched quite considerably here, and it's not unreasonable to think that the market would relax and at least retrace part of this uptrend that the market's been in. But because we are trading up above the cloud, the market has an overall bullish bias, and the market is trading up above the Kijun-sen, which means that it remains bullish, but trading below the Tenkan-sen, the green line, which is telling us that the market has a short-term negativity to it, that it's bearish in the short term, and that's reflected by this fairly strong candle here that's starting to trend down now. Now, the flat Kijun-sen here represents that the market is moving to equilibrium. The very strong angle of the line here, both of these lines reflects the strong upside momentum that the market had, and we know that these markets can't maintain strong momentum in either direction for a long time, so the market will move back to equilibrium. Markets move from equilibrium to disequilibrium back to equilibrium, so that's exactly what's happening here. Once the market is finished in that equilibrium phase, then the market will move into disequilibrium, so we need to be ready for the market to begin trending in a direction after this. So some mixed signals from the Ichimoku charts, still maintaining long-term and medium-term bullishness, but short-term weakness, with us looking for potential support areas down around the 1030 to 1020 levels.